What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a very flat day in the stock market. We're getting very close to some of my critical price targets and we want to remain cautiously bullish. First up, we'll take a look at the NASDAQ 100 Triple Qs ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the Triple Qs, we were pretty flat today, going down 0.07%. You can see that we did print a relatively bearish candle because we do have a huge upper wick and a very small body. Usually this means there's a lot of selling pressure above the body of the candle, and we did see a lot of selling coming in today over that 331 level. However, if you look down here at the volume, this was a very low volume day and it was a very boring flat day for the most part. There's not a lot of sellers in this market and there's definitely not a lot of buyers, so the market is really just at a crossroads trying to figure out which direction it wants to go. That's usually when you get a candle print like this with a very small body, where the buyers and the sellers can't figure out which direction they want this market to go. Now I say remain cautiously bullish because I do have a very strong resistance level up here, which is this price target at 334. If you look at the risk reward ratios from where we are today to this price target and all of this downside potential risk with these open gaps that essentially go down to 321 or possibly even 315, there is definitely more risk to the downside than there is potential reward to the upside. Now that doesn't mean we can't go back over 334, but I want you to pay close attention to the price action, and you can see that we're still trading over top of the upper Bollinger Band. Usually that means the price is going to go sideways or retrace back inside the Bollinger Band, but these bands will continue to expand day over day, which will allow the price action to go higher. But right now I'm not expecting to see any drastic moves to the upside because we're above the upper Bollinger Band and we're getting very close to resistance at 334. So this market is favoring better risk for the bears, so I do expect to see bears come in and try to short this market when we get to 334. If you think of shorting at 334, you know your upside risk is a close above 334 and you can take that small loss. However, if you're correct and you short at 334 and we do come back down to 327 or possibly even the gap fill around 324, that is a huge risk reward ratio. You're only risking a close above 334 for a potential downside move going all the way back down to 324. So that's a good risk reward ratio for the bears. So I am expecting to see the bears step in at 334 and try to short this market lower. That doesn't mean they'll succeed, and that doesn't mean the bulls can't send them packing, but that's where we'll watch the price action and we'll know exactly what to expect after we see that battlegrounds level. So 334 is a very critical level, and don't forget about the gap closes below around 324 and 321. You can see the price action is still well above the 5 EMA, and we're definitely going back into a bull trend. The 20 simple moving average will cross back above the 50 EMA tomorrow, and then we will have all of the moving averages stacked to the bull side. You could see we did get a confirmation breakout of this resistance trend line, and we're well on our way to going back into a bull market. So how the price action behaves at 334 is going to be very critical, because if we get over 334, then we're likely going to brand new all-time highs on the NASDAQ 100. If we break above 334, the next price target is up here at 341. So that will be a brand new all-time high, but we will have resistance right around 336.50, which is the previous all-time high. So know your risk and reward ratios very closely and don't be taking trades that don't have good risk reward ratios. If you're taking long trades right now, you have a ton of downside risk for very little upside reward. That's not a great trade to be making right now, so remain cautiously bullish because we are in a bullish trend with bullish price action, but we do have a ton of downside risk that we have to be aware of or we will not remain a profitable trader. Next up is the S&P 500 SPY ETF, and I want to give you very similar levels to watch for on the SPY. We saw the SPY going down 0.06% today and very flat on the day. We did close above the upper Bollinger Band for 2 days in a row now, and you can see that we definitely have bullish price action with a very strong bull trend. So we are bullish on the S&P 500, but we have some risk that we have to be very aware of. We do have a strong resistance level at the price target, which is right around 406. And you can see we also printed a candle today that shows there was a lot of selling pressure above the 406 level. Now we do have the price target up here at $410, so that is our upside reward, but our downside risk is going to be the gap close right around $400. So if you bound the S&P 500, you have a price target above at 410, so you can view that as a gap from 406 to 410, and then you have a gap below from about 406 all the way down to 400. So we're right in the middle between the price target at 410 and the gap close down here at 400. Usually when you're in a situation like this, I would go with the bias, which is the direction of the trend. We are fully in a bull trend, which means we're more than likely going to continue to head up towards that price target at $410. But while we're above the upper Bollinger Band and way far extended from even the 5 EMA with the price action, it does mean this market needs to cool off. So right now, we could come back down and retest the top of this gap as support, which is right around 403. If the buyers fail to show up at that level and the short sellers come in and they short the market hard, we could easily close the gap at 400. So remain cautiously bullish because you can see there's plenty of downside risk in these markets. We could very easily drop $6 to close this gap, and it could happen very quickly because look at the volume on SPY. We're not seeing a lot of sellers or buyers stepping in, and as soon as we see a lot of volume in either direction, that's going to be the direction this market's going to go. So right now, being right in the middle between a price target and a huge potential downside support level, I really want you to be cautious because it could go either direction. I'm a firm believer that sometimes the best trade is doing absolutely no trade at all until we see clarity come into this market. We're trading at all-time highs with a huge gap below, and don't forget this gap has zero price discovery. The S&P 500 SPY ETF has never had price action between about 460 cents all the way up to about $403.40. That is a gap that has never had price action, and that is a big concern of mine as a bull because I do want to see that gap fill before I'm going long on this market. So right now I'm being very cautious and I'm sitting on the sidelines with a lot of cash ready to buy until we start closing some of these lower gaps. I'm willing to wait for that opportunity, knowing that the probability is on my side that this gap will close. If you don't think this gap is going to close, you're really just being impatient because of course this gap is going to close given enough time. It might take a week or two, but I'm more than willing to wait for that gap to close before I put my hard-earned money at risk. So be very aware of these critical levels and pay attention to how overextended we are getting on these daily charts. On the Dow Jones ETF, we're in a very similar situation. The only difference with the Dow is that we're not trading over top of the upper Bollinger Band. But you can see that we have a huge gap below, and that gap won't close until we go back down to about 331.60. We gapped up to brand new all-time highs, so we have zero price discovery in this gap. We're still in a bull trend with bullish price action, and our price target is just above around 336. So we're stuck between a price target and a downside gap, so it really could go either direction, and you just want to be very aware of these levels and continue to watch the price action. We still have bullish price action with bullish trending, so we're not becoming bears. We're just being cautious, knowing that our downside risk is these gap fills. So on the Dow Jones, look for possible support around 334, 331, and the 20 simple moving average is now at 328. On the Russell 2000, we dropped about 0.29% today and closed right on top of the 20 simple moving average. So that's now 3 days in a row of closing back above the 20 simple moving average, but we still don't have any bullish trending. This market is still choppy on the Russell 2000, and we're very close to resistance at 227. So we have resistance at 227 and 233, and downside support is going to be 224 and 218. On the Arkk ETF, we went up 1.8% today, and that was another price action close back above the 20 simple moving average. The bulls still need to get the price action back above the 50 EMA, which is still at 127. The trend is still bearish, but we're slowly starting to reverse that trend because the 5 EMA did cross back above the 13 EMA today. The downside support is going to be the 20 simple moving average at 121 and the gap fill down here around 115. Now remember that Arkk is not in a bullish trend and it doesn't have bullish price action, so it is my suggestion to avoid Arkk until we see more bullish developments. There's plenty of upside after you wait for the confirmation, but if you get too bullish on Arkk right now and it's not in a bullish trend, you could easily get trapped if it starts heading down for another leg lower. So if you're going long on Arkk, make sure that you understand your exit strategy. And for me, that would be a close below the 20 simple moving average at 121. On the VIX, which is our fear indicator, we did see another green day going up 1.17%. This would have been the second day in a row that we saw the VIX going higher, while the S&P 500 was also going higher. However, the SPY did close in the red. Most of the trading day, the VIX was up while the S&P 500 was up, and that is a warning sign that there's usually going to be some selling into the close. So watch the VIX very closely. Right now, the VIX is still bullish because it's trading below 20, and even better, it's trading below 18.2. That is a bullish level for the VIX, which means low fear and usually goes with all-time highs. However, if the VIX starts spiking back above 20, that will be an early warning sign that we're likely going into a stock market correction. Remember that the S&P 500 and the Dow Jones met all of my upside price targets, and we're very close to possibly triggering a stock market correction. So the VIX is going to be a great indication of when that fear comes back into the market, and that's usually going to go hand in hand with the timing of the stock market correction. On gold, we continue to head higher, and we went up 0.9% today, and it looks like we're well on our way to retesting the 50 EMA price target at 1761. On silver, we also went up over 1% today, and we blasted through that price target at $25, and we're likely going to retest the 50 EMA now, which is right around $25.70. Downside support could be this $25 resistance level that we just broke through. On Bitcoin, we continue to struggle to break back above that $59,000 level. Remember that if Bitcoin is going to new all-time highs, it needs to get a daily close back over 59,000. You could see it struggling around this level, and it's really just trading sideways with that resistance level keeping the price lower. That doesn't mean it can't break it, because it still does have bullish price action with a bullish trend. Now remember that Bitcoin is overextended on monthly charts, so I don't think the risk-reward ratio is there for long trades. If it does break back above 59,000, Bitcoin is likely heading up to the price target at 62,500, and a break of that should bring it back up to 64,000. However, to the downside, if Bitcoin closes below the 50 EMA at 53,000, it could easily trigger a flash crash correction. So be very, very disciplined if you're trading Bitcoin, and make sure you understand where your risk levels are, because it could get ugly very quickly, and we could see a drop of 20 to 50% on Bitcoin like the drop of a hat. On Amazon stock, we went down 0.09% today, so relatively flat, but we did close back above that price target at $32.22. The upside price targets from here is going to be $32.70 and $32.97. Downside support is $32.22 and the $31.57 level. We could also retest the 50 EMA, which is now right around $31.41. On Tesla, we went up 0.08% today, and we did get another price action close back above the 50 EMA. We are only about $1 over the 50 EMA, but we're starting to slowly reverse the bearish trend on Tesla. You can see the moving averages are starting to head back higher, and if they do start crossing back above the 50 EMA, we could start to see bullish trending coming back to Tesla. Remember that I'm still waiting for a daily higher high, which is a close back above 718. If we can meet all of these criteria, then Tesla will likely be going back into a bull market, and we could see price targets met up here at 762 and possibly even 803. So if you're buying Tesla at these levels, just understand that your downside risk is a close below the 50 EMA and the 20 simple moving average, which is down around 666. Support below that is going to be right around 618. On Apple, we went up 0.25% today, but we did find resistance right at that 127 resistance level. That's another price action close back above the 50 EMA, and we're slowly but surely starting to reverse the bearish trend, and Apple could be going back into a bull market. Look for Apple to find support at the 50 EMA, which is 125, or possibly the next support level lower at 123. Upside price targets are going to be 127, 130, and the gap close at 132.80. Remember that Apple has a lot of weight in the Nasdaq 100, so if it goes back into a bull market, that would favor new all-time highs on the triple Qs. On the financial sector, we dropped about 0.2% today, but we're still holding up over the 5 EMA with a bullish trend. On the industrials, we dropped about 0.25% today, but we're still closing above the 5 EMA, and we're still in a very strong bull trend. On the energy sector, we dropped 0.25% today, and it looks like we're still heading down to retest support at the 50 EMA. There is no more bullish trend on the energy sector, and it does look like it is starting to weaken. On the healthcare sector, we dropped 0.38% today, but we did find support right on top of the 5 EMA, and we're still in a bull trend. So going back to the S&P 500, you can still see that we have bullish sectors, and we still have a low VIX, which means we have low fear in this market. It is possible that we continue to go higher towards that price target at $410, but don't forget that we've already met my price target at 404 and 406. So as we have these price targets met, that does increase the probability that we could go through a stock market correction. So I want you to be cautiously bullish, and I always tell my Discord members at these levels to have at least 50% cash so that you can remain flexible and you can be prepared for any situation. Don't forget about the gap below, which is an all-time high gap that is likely going to get filled, which is right around $400. If you just exercise patience, you're going to be in a lot better risk-reward setup in this market, because at these levels, we really could go either direction, even though the trend is still biased to the up direction. Remember that you never know it was a market top until after the fact, and I'm not in the business of calling a market top. I just want you to exercise caution, and I want you to be aware that a stock market correction could be here at any given day. Also remember that on the Stocks Channel Discord, I'm giving intraday updates to help make sure you're staying on the right side of this market. I'm also bringing new trade ideas weekly to the Discord server, so if you're interested in checking out the Stocks Channel trading community, you can find out how to join the Discord server by clicking on the link in the description of the video. Next up, let's take a quick look at our trade idea, which is Shopify, and we see Shopify going up 0.89% today. It's still failing to break and close back over the 50 EMA, but it is still giving plenty of trade opportunities. Remember that the 50 EMA is a resistance level, and that's right around 1169. Downside support levels for possible buying entries are going to be right around 1133 and 1111. We have the 20 simple moving averages starting to positively slope, and that will start pushing the price action higher. So it does look like Shopify could be getting ready to go back into a bull market. We need to see some price action closes over the 50 EMA, and we could easily be well on our way to reaching these next price targets at 1203 and 1260. So Shopify is looking really good, and it's slowly but surely reversing that bearish trend, and it does look like it's getting ready to start heading higher. So remember, I have more trade ideas weekly on the Stocks Channel Discord, so if you're looking for more trading ideas, come check out the Discord server, which you can find out how to join by clicking on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.